Hello, my name is Gavin Elley. I am Head of Sales at Wilmslow Mortgages for Business. I'm here with my colleague Robin Tait, who is the commercial consultant. We hear a lot about buy-to-let mortgages, but probably not so much about commercial mortgages for landlords in the market. And I brought Robin here with me today just to talk about the commercial mortgage side, and specifically what the difference is between a commercial mortgage and a buy-to-let mortgage, and how you apply for a commercial mortgage over and above a buy-to-let mortgage, because there are differences. And there are landlords who are now expanding into the commercial mortgage market who may not have had much experience. So, Robin, I guess the first question is, what is the difference between applying for a commercial deal and a buy-to-let deal?
Okay. The difference when you're looking at commercial investment as opposed to buy-to-let investment is that the serviceability is done through the strength of the lease that's in place. So whereby with buy-to-let you'd be looking at a standard AST normally for 6 or 12 months. With a commercial investment deal you'd be looking at ideally a 3-year lease with a strong quality of tenant, with an established business in the background, with no break clauses.
Okay, so on a commercial basis then, it's really down to the quality of the tenant, the length of the lease, and I guess the location of the property as well, is that right?
That's right, yes. Whereby you have a new business which is coming in, ultimately a lot of businesses will fail in the first couple of years, so we're looking for an established business which we think can be there sustainable for the long-term future. And again, with location, if you're walking down a high street at the moment, you'll see a lot of void premises, so it's what's in the area, what's around, and how long you think the tenant will be in situ.
Okay, so where do you think landlords perhaps go wrong when they're considering commercial mortgage? Maybe they've got an existing buy-to-let portfolio, they're very experienced landlords, they know what they're doing. So where do you think are the things that they're not quite considering when they go onto commercial?
I think the biggest problem we have is that a lot of the landlords will be used to residential buy-to-let rates, and commercial rates are always a lot dearer. So whereby with buy-to-let investment deals you can get rates under 4%. Typically we're looking at 5 to 6% on commercial investment property deals.
Yeah.
Loan to values you can normally get 75%, but interest only is a lot more difficult to get as well. So you've got to be prepared to pay a bit more, and often on repayment terms as well.
Okay, so traditionally on a buy-to-let, obviously landlords are used to interest only for the life of the loan. On a commercial side, what you're saying is that actually that's not a given. It's more likely you may well be on a repayment basis.
More like on a repayment basis, and also associated fees as well. So you'll be looking at having normally an arrangement fee and valuation fees, which again with buy-to-let property you can normally get fee-free products.
And what about the actual application process? What is involved regarding commercial application?
Again, it's a slightly longer underwriting process, so they'll also do due diligence on the tenant that's in situ and also the applicant that's behind it. So whereby with a buy-to-let property it'll just be on you as a landlord. They'll also look at the tenant for the commercial property as well, and make sure that it's, I'll say, an established business. If it's a limited company, they'll also look at company's house and do a bit of background checks on net worth and how they've been trading as well. So
a landlord is going to have to be more prepared, I guess, for commercial application. There's going to be certain things that they're going to need to have in place.
Yes.
When they're looking to purchase a commercial premises.
Yes, that's right.
So would you say things like making sure they've got their accounts up to date, looking at the accounts for the business, that sort of thing?
Yeah, and also if they can get the lease at the outset as well, the lease will be a lot more thorough, so we can look at any break clauses that are there, any rent reviews as well.
Yeah.
Timescales as well, it will normally take at least 48 hours to get a decision in principle.
Okay. And for new landlords, what would you recommend? Would you say potentially look at maybe semi-commercial premises as a first venture?
Yeah, semi-commercial premises are the best of both worlds. So you have a commercial premises on the ground floor and a residential property above.
Yeah.
And again, the serviceability is done through a hybrid of the two leases that are in place. So standard AST above, and the commercial unit again, ideally with a 3-year lease plus and a strong tenant.
So I guess half of that property is potentially something they are well aware of and understand, and then of course on a commercial element you've got something that's a bit new to them, but at least I imagine it's a good first step.
It's a good first step, yes, and yields are a lot better as well for commercial premises. We're normally looking at between 7 and 9%, which is going to be greater than you'll see in a buy-to-let portfolio traditionally.
Yeah. Okay. And any other pitfalls you think regarding commercial that landlords need to be aware of? Is there anything else that they need to be thinking about at all?
No, just be prepared. The rates are going to be higher. That's not us being difficult. That's what the lenders set. The commercial sector and investment property sector is a lot more difficult. there are a lot of void premises about, so just be prepared. It's going to take a little bit longer. You're probably looking at 10 to 12 weeks for completion, and as I say, interest only is not a standard product that's available. And loan to value is 75% absolute maximum. Normally you're looking at 70% or below.
Okay. Now we're based in the northwest. Are there any particular areas that are strong, do you think, for commercial investment?
I would say if you avoid the smaller towns, where if you pick up local publicity, you'll see there's a lot of void property. High streets tend to be in decline, so if you pick a busy city centre location, there's more likely to be strong demand for tenants. Subject to someone leaving, you should be able to replace them fairly easily.
Okay. Thank you, Robin. That was very useful, and I hope you found that useful too. Please visit our website www.mortgagesforbusiness.co.uk, or feel free to call our office on 01625 531 500. Thank you.
Thank you.